The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. Welcome to MEFA's webinar on helping families with their award letters and helping students after the college acceptance. I'm going to ask if maybe those of you, my name is Julie Shields-Rutina, and I'm the Director of College Planning at MEFA, and I'm going to ask if some of you could just let me know over in the questions section or in the chat section if you can hear me and if you can see my screen. I just want to make sure that that everyone can see and hear me. Yes, thank you. Thank you so much. Okay, well, we will get started. I'm going to point out right on this front page, I have a lot of boxes here, right on this front page, that this website, mefa.org/collegebound2020, is a special page on the MEFA website that has a lot of the tools and tips and tasks that students and families can use to compare award letters, make a financially affordable college decision, all of that. So both for you and your students, that's a great website to go back after this webinar and use all of the tools that we're going to talk about. Oh, and that's me. And I have I'm the Director of College Planning at MEFA. I have been at MEFA for about 14 years, but I have also been in higher education financing for maybe 35 years or so in many different capacities. As a Director of Financial Aid, I worked at the College Board, I worked for some loan organizations, and I really, really enjoy working with students, working with parents, and working with all of you, counselors, all to help students and families be able to afford higher education. So I thank you for being here with me today. And I'd also just like to acknowledge that we are in such a crazy time, unprecedented time, really. And all of you, I'm sure, are having your own challenges. Can't imagine, trying to do your job now remotely with your students, as if you didn't have an extremely challenging job in the first place. So anything that we can do, we at MEFA can do to support you and help you at this time, whether it's with your senior students who are trying to make these decisions, or whether it's with junior students who are finding, that college process a little bit interrupted. Please reach out to me directly or any of us at MEFA. We'll put some information up at the end of this presentation and ask for what you need, and we're happy to help you. Of course, we're doing everything remotely now as well, but we're all learning. I will also mention you can ask a question over to the right, or I'd say use the question feature all the way through. I have a question right now that says, how many people are on the call? And it looks like right now there are 17 participants in the call. So there are a lot of you, and that's terrific. So use the questions, and I will try to answer those as I go along. But if I'm engaged in a slide and I miss a question, don't worry. I will get to all of them by the end of the hour. All right. Thank you. And I appreciate the questions because I'm sure we all have lots of them. All right. So this is a presentation we use with families, but it has great information, I think, for you to be able to help those families and help those students make an affordable college decision. We know students have a lot of criteria when they're choosing a college. They want to feel academically it's right, and you've helped them do that. They want to feel socially it's right, sometimes harder to tell. They want it to be a certain distance from home, perhaps. They have all those criteria, but one that sometimes, or in the past maybe, wasn't thought about up front as much as I think it could be, is the affordability piece, because it's just no use for a student and a family to choose a college that's not affordable and be trying to figure that out the whole time. So this is sometimes challenging to communicate with students and families, but I think it's really important, and I think more and more families are realizing that as well. So these are all the ways that you can connect with MEFA. Please continue to do so. Again, we are all working. We're just not going out and working in person, but we're trying to do more and more as you are online and learning how to do that. So please call us, please email us, and please use all of our tools. And let us know what else you need, because we really want to provide any assistance that you need. So this morning, we're going to talk about helping students understand their financial aid offers. And that group of students that we worry about, right, that maybe did not have much of a plan in place at all at this point. So we're going to talk a little bit about helping them. And we're going to talk about how we help families calculate the balance due so they can really decide right now if this college is affordable before they put down a deposit. We have had so many families call us in the summer after the student has already deposited, and then they're figuring out the finances and realizing it wasn't an affordable decision. And that is a heartbreaking phone call. So let's try to help families do that now before they deposit. And we know that colleges are going to allow students to take the time to do that because they know these are unprecedented times. So let's help them do that, and hopefully then make a financially wise college decision. And then we'll also talk a little bit about how we help families think about how they're going to pay the bill once they figure out what the balance due is going to be. How do families pay that? So we'll talk about that as well. So it starts with just an important distinction, which is when a student receives a financial aid offer, it usually is going to have two types of aid, or possibly have two types of aid on that aid offer, merit-based and need-based. Now, I will say that some colleges, the Ivy Leagues, and a number of others like the Ivy Leagues, let me say, an MIT, Stanford, colleges like that, don't offer merit-based aid, really have their whole financial aid policy, is all around need-based aid. But other than that sort of smallish group of colleges, most colleges have some need-based aid and some merit-based aid. And it's important to just know the difference, what's on an award letter. And the reason for that is that the merit-based aid is awarded to a student because the college sees something in them, many times academic, but can also be athletic, artistic. The college admissions office, is using that merit money to attract that student and hope that that student will enroll. So that's important to know. And the criteria for that merit money can differ from college to college. And you know that because a student could be a B+ student and might be really in the top of the admissions pool at a certain college and really very much in the middle or lower middle at another college. And that's why may receive more merit aid at the first school than the second. So you see that happen. But it's good to just explain that to students and families. Another reason why you probably always have the students apply to a variety of colleges, so they also receive a variety of financial aid offers back. One important thing that it's good for a student and a family to know up front is sometimes that merit aid has requirements for renewal. So the college could say, you're going to receive this Dean's Award as long as you keep a 3.0 GPA. So that's just important to know, because then the student has to know that they will be able to do that to keep the scholarship. And then the other type of aid, and most of the aid that's going to be on a financial aid offer, is need-based. And that is awarded to the family based on their financial situation, namely from the information that they provided on the FAFSA, free application for federal student aid, and the CSS profile form if appropriate. So those are standard formulas, and need-based aid is awarded that way. Now, all of this together, when a student applies for financial aid on time, they're applying for all federal, state, and institutional college aid. So that all comes together on the financial aid offer. So then we talk to parents about, let's look at these financial aid offers and really understand what is on them. And the financial aid offers don't always look the same, so sometimes it's difficult to decipher. There is this movement, as we know, to try to get colleges to have award letters look similar. So hopefully we see that happening more and more. But sometimes you see costs. The college will list the costs right on the financial aid offer, and I think that's great because families do need to know what the total costs are going to be. But you don't see that everywhere. And in fact, some public institutions don't know the finalized costs until later in the summer. So again, these award offers can look different. I'm going to just stop for a moment because I see a question. Okay, a good question. How is need-based aid awarded for students who do not submit a FAFSA? So, and don't qualify, maybe aren't eligible to submit a FAFSA. So, very good question. So sometimes a college, if they have a lot of their own institutional dollars, will have, say, international students, non-US citizens, file the CSS profile for international students or another type of financial aid form for international students. And then some colleges don't have that, and they don't have aid for students who don't qualify to file the FAFSA. But there has to be some way for a student to receive need-based aid. There has to be some way to determine that. So those schools that do have need-based aid for international students will have the students complete something else. And that could vary from college to college. So thank you for that question. So then what else you will see on the financial aid offers are different types of aid. And hopefully there'll be some grant and scholarship, which is money that's just given to the student and they don't have to pay back, the best type. You may also see a work study award and then some loans. And again, all of the aid is going to be from all of the different sources, federal, state, and college aid. So let's take a look at what that might look like. I'm going to say that in general, even though people try to define this a little bit more, grants and scholarships, the words are somewhat interchangeable. Sometimes people say grants are need-based and scholarships are merit-based, but it's not 100% true. Just know it's all good. Grant, scholarship, award, those are all good things. They're all money that just goes to the student. And they can be called anything, ABC University grant, Dean's Award, Presidential Scholarship. They have names like that, and that's all good money. Then you do see some federal grants there on the screen. SEOG, Pell Grant, those are federal grant. Mass Grant is a state grant. Then you see Federal Work Study Program. That is a great program. Students can go easily get a job on campus, earn some of their spending money to buy books and supplies and pizza and their bus fare, things like that. What is good to know about work study is, although it's important, and it's an important source of income for students when they're on campus, students need to have a little cash. But a family doesn't get that up front. A student doesn't get that up front to pay the bill. So that's just important for them to know, that work study isn't going to help them pay the bill, but it is going to help them cover expenses when they're on campus or during the school year. So important program, important source of income, but won't have it up front. And then most financial aid offers are going to include the federal direct loans. And there are two types of that same loan. A freshman can get up to $5,500 in that federal direct loan, and it's usually divided between federal direct subsidized, meaning that no interest accrues on that until the student graduates, and federal direct unsubsidized, meaning same loan, but interest does start accruing right away. But for either one, students don't need to pay until 6 months after they graduate. And the difference between how much subsidized they get and how much unsubsidized can be determined by that financial need factor. But the maximum in each would be $3,500 subsidized, $2,000 unsubsidized for a freshman year. Now, you can see at the bottom of the screen, it says, accept all or part by the college deadline, May 1st or later. Check college website. So right now, it used to be that most colleges made students respond and deposit by May 1st. There's a whole list of colleges that have moved their decision and deposit deadline until June 1st. There's a NACAC. If you go to nacacnet.org, I think, NACAC's COVID-19 page, you can search through and see college deadlines that have moved to June 1st or later. And then I've been reading and hearing that even colleges that have a May 1st deadline, do want to hear from students if they need a little extra time and want to work with them so that the students have all the information they need to make this decision. This is a very important year to have all that information. All right, I'm going to look and see. Oh, it says my audio is cutting out. I apologize for that. I wonder, yesterday I heard my neighbors commenting on our internet. Can I repeat the web page? Yes, it's nacacnet.org, I believe. It's the NACAC, National Association of College Admissions Counselors website that has that. And I apologize. Sometimes fine, sometimes silent. I can hear you. Okay. Keep telling me that. And if, let me know, because I want us to all hear what we're talking about, and that's so annoying. All right. So I think I covered a lot of this because I like talking about these federal direct student loans, but I'll go over a little more. The reason these student loans are on an award offer, even though they're loans, sometimes students don't like that or parents don't like that, but they are because they are special. The student is the borrower, no cosigner, no credit check. So there's not another loan that would lend to an 18-year-old. But the hope is they will go to college, they will graduate, they will get a job and pay it back. So that's why this loan is a little bit special. And students, when they do pay these back, then can build their own credit. It's a fixed low interest rate. It does change annually. It's been in this 4-ish range for a while. Will change on July 1st for this group of seniors. I mentioned the difference between subsidized and unsubsidized. There is a fee deducted from the loan amount. There's something that students should know. And what will happen if a student accepts these loans on the financial aid offer, then the college will send them information about how to get the loan. And namely, they'll go to a website, studentaid.gov, over the summer, and they will complete something called entrance counseling, which lets the student understand, I am borrowing, these are the terms of my loan, these are the benefits to having this loan, these are my options when I graduate, so they can learn about it. Important for them to understand what they're doing here. And then they'll sign the promissory note online. And then that amount, once they've done that, well, even before they've done that, actually, gets deducted from the bill. So that already will be deducted when they get their bill if they've accepted that loan. But then they just do need to complete the entrance counseling and promissory note for it to stay being deducted from the bill. Another piece I'll just share about the loans is that the amounts you can see there, $5,500 for a freshman, $6,500 for a sophomore, and $7,500 for a junior, and $7,500 for a senior. So if a student takes all of these, which many do, they'll graduate with $27,000 when they graduate after 4 years. And that turns into about a $300 a month payment on the regular repayment schedule. And for many students, that's fine. And they get a job and that works out. But for some students, they want to take a lower paying job or something like that that's going to be good for their career, or they move to a place that housing is very expensive, or they need a car and they're not able to pay that $300 a month payment. So in that case, they have other repayment choices, also fairly unique for loans. So they could choose an income-based repayment plan, and they choose that after they graduate, and that allows them to pay a small percentage of their income as a monthly payment. Now that will extend the time that they're repaying, but at least allows them to manage that repayment. So that's also good to know. But what is important to know, and we'll get to this later, is that even if they can pay that $300 a month, that's a bill, a good sized bill for a student. So I talked to families about the fact that unless you know your student is in a program that's going to graduate into a high paying field, and again, you never know for sure, but if it looks that way, then I would be reluctant probably as a parent to think about the student taking on any more debt besides these federal student loans. In other words, if there is more debt to be taken on, parents need to think seriously about the fact that that might fall to them. So I just put that out there, and we'll talk a little bit more about that. Let's see, I have another question. So the question is, so it's always $300? Is that something to be able to expect? It doesn't vary unless you choose income-based option. Yeah, I'm going to say it's roughly $300. So because, but with $27,000 in debt, that's a rough estimate that could change by $20 or $30 either way, depending on, did the family pay any of that interest on the unsubsidized part while the student was in school, or did they pay none? There's another piece that we can get into, that if a family isn't able to borrow another loan because of credit, they apply, let's say, for the Federal Plus loan, and the parents cannot borrow that, then there's a way that a student can borrow a little more in this unsubsidized. They can borrow $4,000 more in the unsubsidized, which would bring them up to $31,000. So there are a few exceptions here, but roughly with a $27,000 debt in this program, the payment's going to be roughly $300 in the regular repayment plan. And then the way that they would lower that is to choose another repayment. All right, let's see. I'm going to see another question. Just the deposit may be $300. Can you also speak on the housing deposit? Sure. You know what? That's going to come up in one of these next couple of slides, so I will do that. Okay. All right. A couple of other things. One other process that is happening at the same time as these students are trying to figure out all of this is that colleges have to follow a process called verification. So the federal government requires that colleges verify some of this information that was submitted to them on the FAFSA. So just, I guess all families need to know is that that is a normal process. So two things you can tell students is make sure they're reading their email, because once they've applied to a college and once they've been admitted and the college is sending them things, it's really important that they stay on top of that email so that they don't miss anything, and they don't miss if the college is saying, we want to give you a financial aid offer, but you're missing this one sheet that we need. So as you always do, encourage them to read their emails. They may be asked for a tax return transcript, a verification worksheet. I have two children, one graduated from college, one in college now, and the type of verification worksheet items that I remember receiving, I once had to complete one that said that my daughter did not file tax return the prior year, and I had to sign that and send that sheet back. Another one was I had to verify that her sibling was in college. So things like that. So families should just stay on top of all of that. And these days, colleges also, instead of just sending a lot of email, maybe they've realized that students don't always read it, they usually have a web portal for communications now. So once a student is admitted, they should make sure they log into that web portal, set up an account, and they can get a lot of information there. Okay. And we mentioned this, these students who maybe now are home and hadn't had a great plan. And so we worry about them. So a couple of things. It is not too late to apply to certain colleges. As you know, there are some colleges that have rolling admission. Community colleges continue to accept applications all the way through to September and on a rolling basis. So there's a lot that those students can be doing. And as far as applying for financial aid, students can still file the FAFSA. Although many college deadlines were in the fall and in January and in February, some colleges have a rolling financial aid deadline. So those students can still be encouraged to file the FAFSA now. And it's important to note that the Massachusetts state aid deadline is May 1st. So if we can get them to file now, they may still be eligible for some federal and state aid. We know that most institutional aid has probably been awarded. Now, let me also look. I have another question here. Okay, here we go. Yes, I know what this is going to be about. Great, good question. Yes, we know that COVID-19 has already affected so many families in the way of income and assets, and it's going to continue to do so, we think, we don't even know. So the question is, where does a family start an appeal? And the answer is with the individual colleges. So you send everything through FAFSA and CSS Profile, it goes to the colleges, and then the appeal process is with the colleges. And colleges that I've spoken with know that, and they're expecting it. So absolutely, families should reach out to the colleges where the student has been admitted, where they still feel like this is where my student would really like to go, and be very honest and ask, what can I do to appeal? Share the change. The more specific the family can be with the changes in the income and the assets, the better. And yes, there is going to be a whole lot of that discussion this spring. So we want to encourage our students to, and our families to do that. And colleges, again, I know are expecting it. And a word about the wait list. The wait list is always so hard, right? But this is what we share with students, that you don't really know what that means. For some schools, it's just a very long wait list, and the student may not have a chance, and at others, they may. Usually, there's less financial aid for students accepted for the wait list. I was going to say not always, but that's fairly usually true. And then, so what we tell the students to take these steps to formally accept their spot if they still want to be considered. And in fact, continue to stay in touch with the admissions counselor. Write a short note, and maybe write a short note 3 weeks later to say I'm still interested if they still want to be considered. And then update the school with any recent grades, awards, and keep in touch in whatever ways you can. However, doing all that, you still want to have the student move on also and look at where they may end up attending, and prepare that as well, and end up depositing in another school, because there is no guarantee they'll get off the wait list. All right, so now we're going to get into the nitty-gritty of the costs and how families should take these award letters and figure out, okay, I have this award letter with this presidential award for $20,000, and I have this award letter with this dean's award for 10, and this presidential $2,000 a year boost, and they all look different. So we want to compare apples to apples and have them do that so that they can see, is this college affordable? Is this one affordable? So we have this terrific calculator on MEFA.org, and I'm going to take us into it right now. It's the college cost calculator, and they can take the information about costs in aid and put it in and see these schools lined up side by side. But important to know up front is they have to know what those college charges are. So maybe they're on the award offer, or maybe they need to go onto the website and find costs, or even current year costs, say with a public institution that doesn't have 2021 costs out there yet, but just to get a pretty good sense. And basically what they're going to try to figure out with this calculator is, what are the charges? What is the aid and my enrollment deposit or housing deposit, as you asked? And then what is the balance due going to be? And is that going to be affordable for our family? So I'm going to take us in here, and I'm also going to look at this question. So I have a question about, for Boston Public School and community colleges, are we going to discuss that? At the end, I have a slide about mass transfer and Commonwealth commitment. That would be found on that same website. So we'll talk about that. The key there is making your students aware of all of these options, right? And making sure that they apply to colleges that fall under these lower cost options. All right, so we're going to click into this college cost calculator. If I can do that, let's see. All right, so here it is, and families can print this too. So they just want to go in, and I'm going to do this very quickly and just say $30,000 for this school. This school is $40,000, and then room and board is 15, 12. I'm just making this up. And health insurance, let's talk about that when we do it. So every college is going to put a health insurance charge on the bill. But if a student is already part of parents' health insurance, they can waive this charge. And that's very common. So families should just watch out for that and find the form to waive the health insurance. They don't want to be stuck with a $1,200 bill that the student doesn't need. All right, and we're going to put in some other types of grants and scholarships. And here we're going to put in, all right, and then we'll just get to the bottom. I just thought it would be better if you could actually see it. 3,500. And this family has grandmother's going to give $2,000, which is nice. Okay, so now this family can see, we're just comparing two here, but clearly this family can see, okay, the first college is going to cost us $20,000. The second college is going to cost us $37,000, even after aid. So this is going to depend on the family, of course, but I'm going to say right away, this family is going to say, wow, all right, we can see if we can come up with $20,000 between some savings that we have, and I'll tell you all the other ways, in a loan or something like that. But 37, I don't think that's going to be doable, especially if we're thinking that's for 1 year. For 4, there's no way we can afford that. So this calculator is going to help families do that. And hopefully this third college they're going to put in will be even cheaper. So that's how this works. Now let me just see, I have another question here. Okay, I'm going to go back. Let me find a way to get back. How do I get back? All right. Oh, I'm going to try to get back. Let's see. Okay, good. I did it. All right, so that's how that calculator can be used. I just find that so helpful. I'll even share a personal story in that my daughter's a freshman in college, and of course now she's home doing her classes online. But last year at this time, she was accepted to a number of schools and also rejected from a number of schools. Very tough time. And we did this college cost calculator for 4 colleges. And 3 of them came out roughly in the same ballpark, where we as a family, we're going to have to come up with a certain amount of money. Of course, too much, but a certain amount roughly in the same ballpark. And then there was a fourth school that she liked as well as the others, but we were going to have to come up with $10,000 more per year. And I ended up just saying to her, since you like all of these colleges, there doesn't seem to be any reason why you should attend here, which is going to cost $10,000 more for us. And she understood that. It wasn't that it was so far and above the others. Sometimes students may feel it is so far and above the others, and but those are the conversations parents have to have. All right, so then the family will say, okay, so this is the net price. This is what we're going to have to pay. Which ones can we afford? And it's important for the family not to say, oh, 20,000. Okay, we can do that, because they have to remember that's 20,000 every year. And then, does the student want to go to graduate school? That's something else the student just needs to think about, even though they may not know their full life plan at this point, probably. Also, they want to limit borrowing. Most families do end up borrowing something, especially if they have more than one student, but they really want to limit that. So let's just take the example. Let's say the family says, all right, we think you can go to this college, which costs $20,000. This is going to cost us as a family $20,000. And how are they going to pay that $20,000? Well, we always say that families do that using some past income, present income, and future income. So with past, what do we mean? Maybe they have some savings in a 529 college savings plan or a prepaid tuition plan. Maybe they just have some other savings, investments, things like that. But if they do, that's one way they could pay some of that $20,000. And here are 2 MEFA college savings plans, the U Plan and the U Fund. So I put those there. Families can just call and request to withdraw their money to pay these college bills. It's a fairly easy process. And that's the same with any 529 plan as well. Then all colleges, or I say most, but all, have an interest-free monthly payment plan. So it's not a loan. And the college will let the families know about this, but the families can just join. It usually costs something like $65 for the year, and they can just pay the bill monthly, not twice a year, which is standard. It's standard that the college would bill in July and the bill's due in August, or December and the bill's due in January. But this allows the family to pay over the course of the whole year. And so maybe they can decide, okay, we can pay, treat it like a car payment or something. We can pay $500 a month for 10 months. That's $5,000. So if the family can squeeze that out of their budget, that's great. Or what if they can only pay $200 for 10 months? That's still $2,000 and could lower the amount that they need to borrow. So colleges will tell them about this. And then future income. And that's where borrowing comes in. And families will ask me at this point, well, is it the parent that borrows? Is it the student that borrows? And that's going to depend from family to family. But here are all the things that the family needs to be thinking about. And I already mentioned the piece about, for a student to be expected to know they're going to pay more than $300 at graduation is risky. unless, again, they know that their student is going into a very lucrative career and they know their student is hardworking and that it seems fairly likely that they would have the ability to do that. So all other loans, other than those direct subsidized and unsubsidized, are going to require a credit check. So parents need to look and see that their credit history is okay. And they do want to just borrow what they need and try to minimize that by using any savings or a monthly payment plan. They do have to think about that 4 years or more. And again, considering that major, career, employment rates, starting salary for those students who know what they want to do. Some students know going in, say in an engineering program or a nursing program, but many students don't really know that. So then at that point, it becomes borrowing a loan that has all the best rates and terms, and parents need to do a little homework to figure out what that best loan would be. And you can see on the right of my screen, MEFA is going to have some other webinars on this for families, but a couple of the options they usually have are PLUS loans through the federal government. That's an option for parents, and the parent is on that note, that promissory note only. MEFA has loans where both the student and the parent are on that note. And other banks, maybe a family has a relationship with another bank, they should look and see if those other banks have educational loans, and then they should do their research and pick the best one. And this is the MEFA loan payment calculator. So I share this because whether someone's going to borrow from MEFA or not, it's just a good calculator to use and make sure that you're getting the same information from wherever you're borrowing. So a family would put in, okay, I want to borrow $20,000, 4 years before the student graduates, my credit is good. Here are all my options and the different loan choices. And here's what the monthly payment will look like. Here's how much I'll be borrowing in total. Here's the interest rate and the APR. So this is all very good upfront information for a family to have. Oh, I didn't mean to click into that. Let me click out of that. But that's great. Okay, over here. So again, back to that family who said, all right, this is going to cost us $20,000. Here's how one family might come up with that $20,000 to pay that bill. But we know every family is going to do this a little bit differently. But in this case, this family might say, okay, well, the student has some savings from the summer job the summer prior. We as parents have some savings of $4,000. The student has $1,000. We think we can do that parent contribution to the monthly payment plan, $500 a month for 10 months. So we're going to do that. And then we are going to borrow an educational loan of $10,000. And we know that means that in the end, we're going to end up borrowing 40 because we're probably going to have to borrow every year. But we feel like we can do that. Let's say on 10,000, the payment is about $100 a month. And so then we know that by the time the student's graduating, we're going to be paying $400 a month, but that seems doable for this family. Again, every family has to work out these calculations for themselves. All right, I'm going to answer some questions. Oh, so what is the average tuition increase cost for colleges per year? You know, it really varies from college to college these days. But I usually tell parents, maybe if they're trying to figure that out, to estimate 3%, but it can vary. But we have come down in the last few years where it used to be up more around 4 and 5. It's now down in the 2 to 3 range. So I think parents can feel safe coming up with an estimate of what they're going to owe if they use those numbers. So some timing here, and again, recognizing the times that we're in. But usually this is how it happens, that the fall semester bill is sent in June or July, and it's due in July or August. So families just have to know by then how they're going to pay that bill. But families always ask me, when do we have to start applying for loans? Loans usually the process can happen fairly quickly, but I would try to give it a few weeks. I would try to give it, say, 3 weeks to make sure that that everything, I had time to get all the paperwork together. Oh, and here it says 2 weeks, just being a little extra cautious. Then setting up that payment plan according to the college schedule. But what I'm going to say about all of this is that given everything and possibly deposit deadlines being extended or being loosened, students should just stay in close touch with the colleges right now, the multiple colleges that the student has been accepted to. And then once the student makes a decision, once the family makes a decision to go to attend one college, staying in very close touch with that college to understand all of the deadlines and when everything's going to happen. Because again, things could be very different this coming year. One thing students could be doing, I'm going to take a question. Great. These are great questions. Thank you so much. Great. So what is the average amount of debt that students are in? And how is it asked? What's too much debt, given that this differs between families? Those are the star questions, right? So the average amount of debt, I don't have the data in front of me, but I read this all the time. How I mentioned that the direct subsidized and unsubsidized $27,000 would have a student paying about $300 a month. So that's $27,000. I believe that I read recently the average amount of debt that students have is about $30,000. It's just above that 27. So that's the average amount. And again, that to me seems reasonable for many students, given that they have those options for income-based repayment to manage their loans perfectly fine that way. So that's the average, and I think that is doable for many students with choices for those that it isn't doable for. What is too much is the really hard question. So I would say for many students, more than that is too much. For many. However, again, if let's say a student is going into an engineering program, and we have some colleges in this area with engineering programs who tell us that their students graduate on average into jobs that are paying $70,000 and $80,000 entry level as graduating as an engineer. I've seen some great statistics at other schools. So while you can never count on that, if a student is a hardworking student and knows they're sort of the type of student who's going to do whatever it takes, they're in a program like that the likelihood of getting a job like that is likely, maybe those students could say, I'm comfortable taking on a little more debt than that. And if I'm going to go to graduate school, I'm going to take time off and work first and pay down this debt before I take on more. All of that, it's very individualized, but those are the things to be thinking about. Thinking about, when you tell students that on the other end, you try to describe what their life is going to be like if they have a lot of debt. Maybe if they can understand that, which is really hard, then they make better decisions. So it's very individual, but I would say that anything more than that average of 30, students really need to consider what that's going to mean for their future. I know that doesn't give a definitive answer, but I think that's really true. Sorry, so the question is, what did I say was too much? I guess what I said is that over and above the $27,000 of federal student loans should be considered very carefully. So I guess that's the way I'd say it. Should just be considered very carefully, and the student should consider what that will mean when they graduate. and how that will affect the choices that they want to make about where they want to live, what job they want to take, graduate school, all of that. All right. Oh, so let's talk about this slide too. Uh, Private scholarships. So while students are home at this point, this might be a good time that they could just be doing a little work and research to find any private scholarships. So here are some websites: mefapathway.org, collegeboard.org, fastweb.com, studentscholarshipsearch.com, and also we at MEFA post information about scholarships on Facebook and Twitter all the time. And we've also written some blog posts which um, give details of scholarship search engines out there and the differences between and among them. So connecting with MEFA is a good way to find out about scholarships too. And students can find a few, apply, and then every little bit, $200 here, $500 here, can be really helpful in paying those college bills. So this is what one of you asked, that we have some really special programs here in Massachusetts. So when families do these college cost calculators and look at them and say, wow, some of these colleges are just not affordable, I really want them to understand that there are options here in Massachusetts. So I know one of you mentioned there are some options with Boston Public School students going to community colleges and how they can get some tuition breaks. Also, there's a mass transfer program where students who begin at a community college can then have credits transferred and have some tuition reduction going to four-year publics. And we have there are lots of calculators at mass.edu/mass transfer. So this can be a very affordable way. There are also some consortiums that can lower tuition further. So have students go to these websites to make sure they know that these are really good options. This other website I'm showing is called Tuition Break, and that has a listing of programs that are out of state at New England colleges where we don't have a program like that in Massachusetts. And that in that case, students can go to these out of state colleges and go to these certain programs and pay in-state tuition. So this is also another great website. And, we talked a little bit about appeals, and I'll mention it again. So once a student is admitted and accepted and has a financial aid offer, they should stay in close contact with the financial aid office at the institution. And they want to ask about, is this scholarship renewable next year and for the 4 years? And do I have to keep a certain grade point average? If I bring in some private scholarships, is that going to leave my award the same? And also then any changes in circumstances and appeals, please bring up with the financial aid office. Have them bring up with the financial aid office and have them feel comfortable about it. You probably find this too, but I sometimes find that the families who are in the worst circumstances are the ones who are the most reluctant to talk about it and bring it up, because maybe they've found themselves telling their stories in many places. But if we can just encourage them that colleges are expecting this, colleges know that people are hurting in this current time, and that they should just feel free to contact the college and ask about an appeal. And then the other important thing, usually then at this time of year, colleges would be telling students about orientation programs and accepted students days and all of that. And of course, those are not happening. So, but colleges are doing what you are all doing and what we're doing at MEFA, trying to take these programs online. And I think they're doing a really good job. So students should stay in touch with the colleges and try to take advantage of all of those online programs. I'm sure colleges will put them in touch with students online. They'll have panel discussions online. They'll probably have campus tours online. So make sure that students take advantage of all of these. So next steps, review this financial aid carefully and calculate those balances due so that they're not making a choice without doing that and then regretting it afterwards. They'll have to select a college at some point. Again, stay in touch with colleges about those deadlines. And MEFA is here to both help your students, and to help students directly. So you can have them call us and we can walk them through and do those calculators with them online, all of that. I'm just going to see if there are any other questions. Okay, I'll keep going to the end. I think I'm getting close. Just these are our social media accounts, good ways to keep in touch with MEFA also. And then I'm open. I'll stay here for a few more minutes, take some questions. Here's our phone number. Here's our website. And please stay in touch with us and let us know what you need to help your students in this very difficult time. I can't even imagine how challenging it is for all of you. So what other questions? What didn't we cover? What else could we add to these type of presentations that would be helpful to you? Okay, thank you. Yeah, so the PowerPoint, I connected it below. Let's see. I think I attached it below, but I will also send it to you tomorrow. I'll send a follow-up and send you the PowerPoint. And yes, thank you for saying that. Yes, when I send you the follow-up, I will send the recording and the PowerPoint. And you can also find all of the recorded webinars right on our MEFA website as well. Under events, I think it's under events, and then you pick the topic and they're there as well. But yes, I will resend this tomorrow, and feel free to share it widely. Thank you. For a future topic, supporting undocumented students through this process. I'm going to write that down. Thank you very much. So the career calculator would be helpful. So I think I know what you mean here. Let me know if you want something else. But let me share that MEFApathway.org. So that is MEFA's online free web portal for students. And some high schools use that as their career and college portal. But even if your high school doesn't use that, students can always go in and create a free account on MEFApathway.org. So I will send that in the follow-up notes too, because MEFA Pathway, because it's a web portal for students, allows them to take interest assessments and it allows them to research careers. And there's a wealth of information about careers and also colleges, and there's financial information in there. So that would be a good place for students to research careers, and we continue to improve that. We have some really exciting things happening with that for the future. So I'll send the link to MEFA Pathway that maybe your students could use as well. Thank you for that. Yes, and exactly. That would allow a student who doesn't really have a sense of that to know, well, if I'm going to be a social worker, this is what my salary might be versus an engineer. Absolutely. So check out MEFApathway.org for that. Yeah, so this is a very good point. That it seems like 30,000 is a lot to borrow, especially if, average graduation, students are earning $45,000 or something. And you're right. I mean, $30,000 is a ton to borrow for a student. So my answer is very much in context, because the truth is, sure, I think it would be really almost better if a student went to community college first and took advantage of those mass transfer benefits, and then went on, if they wanted to go on to a 4-year institution at a reduced cost and maybe could borrow less. And absolutely. So if a student can borrow less than that, that's better. But my comments about what's okay are very much in context of where we are today in 2020 and how much college costs. And given the costs of college and the financial aid offers that are going out to students, it just seems that many times students, if they're choosing to go to one of these expensive colleges, even with very good financial aid offers, they are still left with having to borrow. And the reason I feel better about the federal loans is that they do have all of those options at the other end, where they have a chance to pay it back as quickly as they can if they're able to do that, but that they can also take advantage of those other repayment plans like income-based repayment. And that makes me feel like at least they can manage that over the course of time. But you're right, it's all very contextual. We're a product of the time. Anyway, thank you for pointing that out. So yes, that calculator that I showed you does show the total cost of borrowing after all of the interest over the 10 years. So that shows the total cost of borrowing, which is why I love that calculator. So here's a great question. Do you think some colleges will have a hard time keeping their financial aid awards if they are losing money this semester with international students next year? Yeah, I mean, I can only converse with you on it. I don't have any answers, and my colleagues in the colleges don't know that either. These are such uncertain times that I know colleges are doing the best they can, but clearly there are financial issues for families, for colleges, for all of us. And so everything we talked about today is subject to so much uncertainty, adding just that extra layer of anxiety and uncertainty. And that's really all I can say about it. It's disconcerting for all of us. So that's why I think, as I have always said for students, keeping options open, keeping an open mind to different paths that will lead them to their futures has always been a good idea. And I think it's an even better idea, or it's very important now. That's how I'd talk about that. And thank you. You have a wonderful day too. So thank you. Please keep in touch, and anything else we can do to help you. And have a good day. Good luck, and stay safe and stay well.